satisfied, wandering mind, the seams have come undone. You've been telling lies to these eyes as if they'd never seen the sun. Now you've let your guard down and your heart is exposed. Now you've let your guard down, but how could you have known that I'm the big fish round here? You're a small fish. I could make you disappear. You should know this. I'm the big fish round here. You're a small fish. I could make you disappear. You should know this. I'm the big fish.
Let's see. Woo. A lot of people getting punished. Crypto's fun when it only goes up, but when it goes down, the market's rigged. This market sucks. Oh, you guys all laugh. Everybody wants leverage. Everybody wants to borrow. Everybody wants to. Until now. You don't like that leverage now, do you? What is Johnny come lately? That means people that just show up for the party late. People that just fumble into the market. Like when the dude that's driving the Uber tells you about his crypto portfolio, that he's going balls deep into Safe Moon, Doge, Ample Fourth. The good tokens. So yeah. And look, there's good for investment and there's good for trading. There's tons of stuff that I wouldn't own that you can trade the crud out of and you can make a ton of money. But trading is not investing. This is not a trading channel. This is not that's just not the way kind of I do stuff. There are a lot of people that are very successful traders. But trading, you got to be good every time. You can't have a bad day as a trader or you're done. Most likely, depending on it, as long as you have position limits, you might be okay. But there's a lot of people that have been bounced out of the crypto market permanently because they got over leveraged. They took on too much debt, blah, blah, blah. It happens a lot. So you probably want to decide if you're a trader or an investor, and then you want to proceed as such. So before we get into all that, so yeah, that's Johnny come latelys, people that just showed up, All right. Winklevoss brothers were online last night. What's your opinion of Gemini? Gemini's cool. Winklevoss, they are smart. I don't like their exchange because it's kind of a little too restrictive, but they're smart. I mean, listen, they cornered several markets before anyone else. They cornered NFT space before anyone else. They kind of cornered Bitcoin before most other people did. So they are a lot of things, like maybe kind of douchey, and I don't know, they do what's in their best interest, but a lot of times what's in their best interest is our best interest. Let's see. Manuel says, I'd love an explanation of what the GBTC premium and discount to native asset value and what it means for the market. Well, we can get into that. I don't think it means anything for the greater market. But we can certainly discuss the structure of GBTC so that people understand why you could have premiums and discounts. That's just people buying into it. You can't peg an asset. Think of a dollar. If a dollar is scarce, a dollar would trade for $1.01. If it's plentiful, a dollar could trade for 99, 98, 97 cents. So any asset, you can't really appropriately peg it. So GBTC is a trust that is essentially pegged to the price of Bitcoin, but people still buy and sell that asset as a separate asset. They're not buying and selling Bitcoin. They're buying and selling the trust, the shares from the trust. And so when a lot of people want to get out, it's going to trade at a discount. People are going to exit and they're willing to take a hit. When there's more sellers than buyers, it's going to be discounted. When there's more buyers than sellers fighting for it, there's going to be a premium on it. Right? So, yeah. And let's see. But what does it mean for the greater market? Nothing. It's just exposure for people that don't have ETF exposure. The big story is what happens to GBTC once the first, like the Van Eck ETF gets ruled on and that goes through. Then what happens? Well, they've already said, and we speculated this. They're gonna unwind GBTC and turn it into an ETF. They say that's been their plan all along. I don't believe that. I believe that's been their plan right now. Okay. Ryan says my only problem with GBTC discount is how often does the price actually match BTC? It doesn't. It's like two ships that are in a race and they cross back and forth. And it's been as high as a 30% premium and as low as like a 12% discount. So yeah, if that helps. Don't read too much into GBTC. It's just a facility that warehouses Bitcoin, has a trust, and sells shares against it and roughly pegs it to the price of Bitcoin. If more people want it, the price goes up, so there's a premium. If less people want it and there's a bunch of selling, there's a discount. Don't read into it too much. They just own lots of Bitcoin, so they're a huge buyer. They laid into it 2 days ago. They bought another 700 and something million in assets, and about half of that was Bitcoin. And then to an extent, they bought some other assets. I think these guys are laying into, well, there's a couple of projects I think that there's a little bit of flawed thinking. Whatever, it doesn't matter. The chain link pivot's pretty funny. But it's interesting, Band versus Chainlink and how that's all going to pan out. Because Chainlink is doing some stuff with Polkadot, so is Band. And then you're going to have your whole an Oracle solution, a completely new Oracle solution by Cardano. But there's also a chance that any of the current Oracle solutions will probably, partner up with them to an extent. You don't want to just be in one or two chains. Chainlink knows they can't survive if all they do is service Ethereum smart contracts. That's probably not a business model that will survive. So anyway, who knows? Okay, let me say hello to everyone. Let's say hello to Scorpion, to S Thumps or ST Humps, depends. Veritax, what's up? Tommy Bernard, SJO, Theta TV, the real J. Cole in the house, Baykeeper, Grims. I like Grims. Grims is cool. Grims sounds cool. Belinda and Cece Brown and Solid Gold. Antonio in the house. What's up, buddy? Get involved. V-Reload. Stress relief. You just say it. It makes you feel better. Tommy Bernard. Mr. Gordon. Bennett. Spirella. Cabeza de Termo. Biotech Breakout. Dats. Cassley. What's up, Cass? Seb. Crypto Newbie. Although after a while, you're no longer a crypto newbie. So anyway, hello. Joe Pirate. Oh, you know what? Let's do this one. Boop. Sniper Princess. And, Woody. JR80. Cool. All right. Let's see. Specialist. Nick can't own a yacht. His diamond hands would scratch the... No, I don't have diamond hands. That's the thing. I'm not afraid to take a profit. You ask some of my clients, we took all sorts of profit the last few days. Well, no. Sorry, not the last few days. Last week. We took a lot of profit. Mark, what's up? But we have like a plan where you take profit on regular, consistent bang, 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 bang. I know, Nexus, right? Nexus Mutual. Oh, hey, listen. If it gets up into the 90s, then Emmanuel, I will look at it because the numbers and this, it doesn't lie. So who am I to go against the flow, right? So I don't care how we make money as long as we make it. We don't incur a huge tax burden. We don't get into debt to do it, and we don't get unwound. We're going to talk about a little bit of leverage today, but not the good kind. Turns out old Alex, everybody's best friend, is telling his constituents and customers to deposit more crypto so you don't get a margin call. Interesting, huh? Interesting when your business model is to panic your current customers because you know they've taken on too much debt. So who does that tell you you're lending to? Are those the institutions that they talk about? We only lend to institutions. Oh, really? Really? Then why are you warning everyone at a press conference? I'll read the article. Alex, why are you warning everyone to deposit more crypto so that you don't get margin called? But I thought you were just lending to big institutions. We'll see. We'll see. I know I saw AGI on there and Thorchain. What? Taking a close look. Okay, so Nefers, good to see you. Let's go over here and say hello to everybody. Darting uphill, Dan, Jimmy James, Wolverine Maniac. Two incredibly enigmatic creatures. Joe, ¿qué onda? Scorpion again. Bernard Castillon. And we have Sylvia. We have Patsy, Tom, Ryan, Emmanuel, of course, Skeptical Poop, Ashley and Dave, Jeffrey, and Ryan, by the way, thank you for the tweet. For those of you that can, trying to see if this works, if this has any efficacy. If you can, go to my Twitter and just retweet the show because the show happens on Twitter. And I'm wondering if maybe that's a cool way to spread the show. Ideally, we would point them towards Theta where they could monetize their eyeballs. But anyway, if you guys think about it, go to Twitter, Nicholas Black 60, and put a little boop, yeah, and retweet, and maybe your peeps will see it and go, oh, cool, let's listen to this a-hole talk. All right. Liquid Smoke, what's going on? Dubai Money, Brady in the house. Wojtek, Diamond Hands. Hell no, I will sell everything. P. Kelly, there's only two assets I wouldn't sell. Well, that's actually a lie. There is no asset I won't sell given the right circumstances. That's it. I mean, there's nothing I won't sell given the right circumstances. There are things I would rather not sell. There are things I would rather borrow against. What? Right circumstances. Jeffrey, P. Kelly, Wojtek, Demayan, Dubai Money. Ooh, nice. Be careful. We may not be at the bottom yet. Sometimes you go and try to scoop up the bottom and you realize you're 7 floors up. You're not there yet. Chris Parsons, what's going on? From Detroit, Motor City. Scott, what up, Scott? Oh, nice. Thanks, man. Bam. In the house. Let's see. Big Jig. Market is hot. It's something. The market is something. Let's see. GBTC was selling at a 20% discount. That means a lot of people running for the hills. A lot of panic. That's good. You can make money in that kind of situation. That's funny. Grims, that's the greatest. The little alien doing like the little, like a twerking. That's great. To that pipeline, what's up? Winklevoss Brothers on last night. Oh yeah, we talked about that. They're cool. Whatevs, they're cool. McCabe's, what's going on? Oh yeah, you watch on Twitter. That's cool. Nice. Yeah, Twitter coverage is not bad, right? You get the little screen. It's got like little colory things on the side. You turn it, whatever. Babis, what's going on, man? Good to see you. Greetings from Greece. Nice. My buddy had his fake wedding there. And I say fake wedding because it was like I'm not going to say who it is, but I had a buddy who did a green card wedding for a girl who lives in Greece, and she came up and whatever. Now it's fine. It was like the 3-year wedding thing, and now she's American. Anyway, I think, but he went to Mykonos. That's where he had all of his stuff. This stuff's pretty fun. Esteban, what's up, man? Argentina. ¿Qué estás haciendo? ¿Cómo se dice? En Argentina ellos dicen palabras con el pronunciación de España, ¿no? Castellano es más de, ¿cómo se dice? Influence de España, de catalán y castellano. Gracias. Gracias. Anyway, Hologram, what's up? Okay, so let's go. Let's start the show off. Sue's official, and we'll be right back. Okay, we're back. Why don't we start? So let's look. Bitcoin Candy, what up? Let's see what's going on. Okay, so you guys saw this based on Vortex scores. And again, this is pro Cointelegraph. They have their own way. This doesn't tell you when to buy or when to sell. What it tells you is historically, when these assets hit a certain number, historically, they've performed in a certain way. There are time-based strategies, okay? There are price-based strategies, and there are score-based strategies. What would a time-based strategy be? Okay, Thorchain hits 90, it's a buy signal. I'm going to wait time 168 hours. Does anyone know what 168 hours equals? Ding, ding, ding. That is a work week. That is 7 days times 24. So yes, good. That's 168. So they'll say, listen, at 90, it's a buy signal. The time-based strategy is hold for 168 hours and then immediately put a stop loss order in that tracks the price. And whenever it comes down, you're out. I'm not telling you that's the time-based strategy. That's a time-based strategy. And each week and through their Discord, they discuss which strategies were more or less effective. Okay, so then you say, okay, well, what's a score-based strategy? Okay, it gets to 90 as a Vortex score. When it gets to 65 as a Vortex score, sell it. Okay, so that would be a score-based strategy. And then there's price-based strategy. And that would simply be when an asset hits X, like a 90, okay? And then there's a variety of other things. But when it hits a 90, you immediately put a sell order in for 28% over the price of where it is at that moment that it hits 90. You say, well, what if I didn't catch it when it hit 90? So let's look at like Singularity Net is a good example. By the way, Thorchain is something that I'm starting to invest in. But I think I've told you guys that. But Singularity Net is something I've been investing in. So you can look back over the chart. This is kind of cool. You can actually pull this chart as PNG, but you can slide across the chart and find out when it went into the buying range. So here is in the 80s. It's almost there. It's one of those things you look at, but based on this, you don't buy it yet. You almost bought it right here. It was a 79, but no. You almost bought it right here. It was 81, but no. Based on these, so some people, like I've been in their Discord back and forth, some people are like 80 is the number, 90 is the number. But statistically, based on what they've said, 90 is the number, right? 90 is the number that I used a few times over the last 2 to 3 weeks. Yep, 3 weeks. And I've been able to scrape somewhere between 20 and say 28%. I say between 20 and 28. 28 was my best. 20 was my... Now, let me warn you. One of the assets that I traded like this was Easy Finance. And you guys saw what happened to that a day ago, right? No, if you did or didn't, it lost $80 million. Someone hoovered up 80 million effing dollars. So we're talking Singularity Net. Cool, right? Well, look what pops up under the news. Fetch. Fetch is another one of our interested assets. So we're going to look at this. This is a news blurb from Fetch. So this is a fun place for us to start. Okay. Fetch.ai partners with Cosmos Station to expand DeFi ecosystem. When you think Fetch, you should think artificial intelligence. When you think artificial intelligence, now you're seeing way down the highway, several turns away. You're not looking in front. You don't skate to where the puck is. You skate to where you believe the puck is going to be. For those of you that like hockey references, if you're driving a race car, you don't look at the turn, you look past the turn, right? You don't look in front of the car, you look where you're going next. Don't fixate on what's right in front of you. You're going to lose track of what your goal is as an investor. And as your investor mentality, the back of your brain should say, I don't really care what's happening right now, as long as my fundamental thesis, my idea of where the future is going to be a year, 3 years, 5 years from now is commensurate with my account. And I've expressed my thoughts about the future in my account. That's all you can do, right? And then take profit on a regular basis so that you don't, so if you make a mistake, you still have cards in the game. So I believe personally, I'm sure I'm not alone, I'm not the only one that thinks AI is a big deal. You know, the smartest person on earth, at least that we know of, or at least one of the smartest humans on earth, being Gortzel, he seems to think AI is the future as well. And I kind of like him. Anyway, Fetch is another way to skin it. The collaboration, the collaboration marks the latest in a series of important partnerships with Fetch the Fetch.ai, we know this was not written right here, has made this year following their mainnet 2 launch on March 31st. Cosmos Station. The partnership between Fetch and Cosmos Station involves providing institutional-grade staking and validator node service on Fetch's AI mainnet 2, as well as expanding Fetch's AI. That's a good one. I think we'll play that. Okay, as well as expanding Fetch's AI DeFi ecosystem to reach a broader community. Yes, broader, because we don't know much about their DeFi ecosystem. We're learning. The integration of Cosmos Station will allow users on Fetch.ai to easily and safely stake their tokens on mainnet 2.0 to earn rewards, enable them to access additional dApps, which includes non-custodial mobile and web wallets, as well as Mint Scan Block Explorer. Okay, so Fetch is now integrated with Cosmos Station Wallet. Both iOS and Android apps are available. The links below. I'm not going to give you these links. I haven't clicked these links. I don't know. Yes, this is from Fetch.ai, but do your own research. Don't just go running around banging your tokens here and there. I'm staking directly through Fetch. I'm not going to probably change that anytime soon. There's a lot of reasons why staking directly with Fetch is awesome, but this is cool. They're at least continuing to build out the ecosystem. Okay, cool. The version 2.0 of Fetch.ai mainnet, which was launched on March 31st, is a major step toward building an AI-powered blockchain that allows businesses and individuals to deploy autonomous economic agents, AEAs. You're going to hear this a lot more. Autonomous economic agents for DeFi applications such as stop-loss agents and agent-based oracles. This is where, if you're an investor in Link, you should be super fucking nervous, because these will, my guess is, these will likely come to dominate the space, right? You trust Sergey, or do you trust the best efforts of science and humanity distilled into artificial intelligent agents? Autonomous economic agents and agent-based oracles. Anyway, they're interoperable with chains like Polkadot, Cosmos, Harmony, and more. Cosmos Station was designed to slot into infrastructure of various proof-of-stake networks, with a particular focus on those built using Tendermint engine and Cosmos SDK, such as Fetch.ai's mainnet 2.0. To go into further detail, the 2.0 ledger is being built using the Cosmos SDK, right? Development kit. And will offer full interoperability between Fetch.ai's native token, FET, and other IBC-compatible chains, and the ERC20 via gravity-based interchain bridge. Interesting. Everybody's becoming interoperable. They're all plugging in. That makes you think of Near. It makes you think of the Rainbow Bridge, and makes you think of what Thorchain is doing. Interoperability is the name of the game. So it's coming. All right. Fetch.ai Ledger is set to include a decentralized random beacon, DERB. It's got a DERB, everyone. You're welcome. And the integration with Tendermint will result in secure consensus, compact multi-sig for reducing storage costs, and a slot proof of stake consensus, SPOS, that reduces computational burden and protects validators from operating nodes at a loss. Sound familiar? Sound similar to Cardano? Fetch.ai's overall goal is to transition from current centralized siloed economy based on a network of intermediaries employing a loss of costs on a lot of error-prone and time-wasting manual operations to a smarter, automated ecosystem and economy based on intelligent machine-to-machine communication and payment system. This ecosystem will come to be more efficient and more convenient, quicker, cheaper for everyone. Okay, so this is probably taken from someone who's just really wrapping their mind around the English language, and let people focus on what really matters for them and what only humans can do. Don't you think that's funny? The way this is worded is kind of funny. It's like, we want something for the humans run by robots. Hey, listen, when Skynet comes, I am a supporter. I believe, hail to our new robot leaders. And you know what I mean? In Sophia, we trust. Cosmos Station was designed to slot into infrastructure of various proof of stake networks. Okay, so we got that. We understand what they're trying to do, how to delegate. We're not going to talk about that because I don't want you guys running around throwing your tokens everywhere. Fetch.ai is building a decentralized machine learning platform based on distributed ledger that enables secure sharing, connection, and transactions based on any data globally. You basically get it. Cool. So Fetch is doing some stuff. We're going to keep abreast of that. So going back, Singularity Net's looking interesting. We shall see. We shall see. Let me go back here and show you guys what's going on in the volume. Okay. Oof. Sometimes it shows you the bottom ones. Omise Go. Of course, that one's going to crash. Let me go here. Great. Let's scroll up. So what's going on? The big movers today. Obviously, these percentages are not as dramatic as you normally see with a lot of these other assets, but hey, it's something green, right? Compound up 9%. Helium, DAI, Waves. DAI just got staking on some platforms, which is a stable coin. It's interesting that it's $1 too, because people are racing into it, and so it's got some competitive pressure. Waves, Tether. I have some Tether announcement. Most of you already know, but for those of you that don't, I'll tell you in a second. The Tether announcement was actually one of the more shocking things I had read. I was like, really? Okay. It doesn't matter that that everybody that's involved, almost everybody involved in Tether is awaiting indictment, has been arraigned, or is currently out on bond pending of indictments out of the Southern District of New York. But I guess that's okay. That's how crypto be. Twitter volume, Ampleforce, Solana, Maker, Bitcoin, Gold, and Serum. It's weird, isn't it, where the Twitter volume is the highest thing, but all of the assets are down. Every single one. So it's one of the very few times where you see that, where every single asset that has the highest Twitter volume is actually down on the day. And the highest one, Ampleforth, is down about 25%. That's not nothing. All right. And then trading volume is Maker, Solana, FTX, Compound, and VeChain. VeChain's getting kicked in the taint. It went way too far. We talked about this. It went too far on nothing, on fairy dust. Last week, you guys know, last week was ridiculous in many assets for many reasons. We had it coming. We had this coming. You can't only go straight up and to the right. You have to clean the books out. You have to kind of, shake out the YOLOs and things like that. It is what it is. And, people get irrational and they start taking on leverage and they start thinking they see things that other people don't. When you start believing that you see something that nobody else sees, you have to be careful that it's not like a mirage, and that you've created a reality for yourself that might not play out in real life. So we got to be careful. We got to protect ourselves from ourselves. And part of that is leverage. Speaking of leverage, Let's go. We had that one. Do we want intrigue? Do we want some intrigue as we talk about leverage? Ooh, yes. Let's see. Nope. No, not this one. Not yet. You guys don't get this one yet. Hold on. Let me get my little article up. I had it ready. Oh, where are you? Where are you, article? There we go. Oh, my favorite cat. Crypto lender Celsius tells clients to increase collateral in case of margin calls. Oh, Alex. Oh, Alex. You think they're still having those dumb shows on Clubhouse where everybody changes their little face emoji to Alex? And they all go, rah, 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 Alex, Alex, Alex. Yeah, we're all Alex. Alex is going to make us rich. Come on, man. Stop with the religion. Crypto is not religion. These people don't give a crap about us. They don't. You think he's telling you to put more assets on his exchange, on his platform, because he cares about you? I'm just looking out for the people. Okay. Gotcha. Thanks, Alex. Gonna make us all rich, Alex. Crypto lender Celsius warned clients in a tweet Friday. Of course, because why wouldn't you just, you would email your clients. If you were worried, you would email them and say, listen, the market's been crazy. You may look at the idea of managing your level of risk. Communicate with them. Talk to them about the evils and the pluses of taking on leverage. Maybe discuss that with your clients since you care so much about them. Don't put a tweet out. We're not all hanging on your tweets, dummy. Crypto lender Celsius warned clients in a tweet on Friday they should add crypto to their accounts in the event that the lender has to demand additional collateral. So that we don't forcibly stabilize is what he's really saying. BTC down 8.7% in the crash of March 2020. Several crypto lenders, including Celsius, had to make margin calls into hundreds of millions of dollars. Yeah. And what do? They start melting your account. They force liquidate. You could call it force stabilization, a controlled unwind. You can put whatever term you want on it. They're selling your shit. That's what happens. Why? Because you took leverage and you didn't need to, because the crypto space is good to you already. It's okay just to accept the gains that crypto gives you without taking on leverage. But here we go. In Friday's tweet, the lender said clients should be prepared for margin calls, meaning it's coming because of market conditions. That tells me they think, and there's some smart people. Let me say this. Because I'm not a big fan of Celsius doesn't mean I don't think they have smart people over there. They have really smart people over there. I've spoken to several of them. They're very sharp. Maybe not super well-rounded, right? Like in the macro space and all that. They don't understand the junk bond market. They really don't understand a lot of debt markets, but they're very sharp. They're very smart individuals. So if they're telling you on a Friday, hey, maybe deposit some more crypto, that means they believe S is about to get real. Okay, so their tweet was, due to market conditions, we recommend adding crypto to your Celsius account to secure your loan. In case of a margin call, we'll be in touch with you directly if a margin call is issued for your loan. For additional assistance, call 1-800-GO-F-YOURSELF. All right. Crypto lending is popular among holders who want to raise cash without selling their coins. True. And market makers who want to fill orders quickly. Also true. The phenomenon could potentially improve liquidity and price discovery for crypto assets, but it also has introduced systemic risks. Yes, and those will only be made worse. They will be made worse with ETFs. Do you guys notice that it's directly proportionate with all of these new products, all of this new kind of exposure? The volatility is every bit as crazy. not as bad as 2017 because those were really illiquid markets. But what's happening with these products that have a lot of leverage is you're starting to have way more paper Bitcoin than Bitcoin. And that's systemically dangerous because it basically moves the market, these big moves. Also, what do you see? A lot of Bitcoin off the exchanges in private, either in wallets that are private or cold storage, meaning that a move with one Bitcoin is amplified. An example, if 90% of the Bitcoin, which I contend we're close to that, if 90% of the Bitcoin is off exchanges, right? So there's 1 in 10 left on exchanges. Well, then that one Bitcoin being bought or sold has the same net effect on market cap as the other 90%, which is not being sold because it's being, institutions are not trading Bitcoin back and forth. They're trading around it in futures markets and in other products. So they've taken and warehoused their assets. It creates a place where Bitcoin becomes both illiquid and amplified in volatility. Even though we all know, listen, imagine a scenario where there's only one Bitcoin left and all of the Bitcoin is in cold storage. You think that is incredibly secure. That's good for Bitcoin. Yeah, it's good for the long end of Bitcoin, but that means that a buy or sell with that one Bitcoin moves the market cap directly proportionate. So if I just dump that one Bitcoin, that drops the entire market cap. If someone buys that Bitcoin, buys it up, that lifts the entire market cap because cold stored assets are still considered assets. Same thing with these platforms like Ethereum. A lot of Ethereum is staked. Cardano, 80% of the Cardano is out of the system, mostly in Daedalus, and to an extent through the other wallet, that not Exodus, although some people stake through Exodus. I'm not talking about Exodus. I'm talking about the Yoroi. So Daedalus, Yoroi, and then I think it's Daedalus, Yoroi, Exodus, and then some on exchange staking. But anyway, 80% of the Cardano is not in the system. So when you see the price moving, you realize that's only 20% of the float is available, and that's what's moving the market. Anyway, cool, man. Let's see. 1-800 you're boned. Oh, 1-800. Oh, yeah, you're boned. That's a good one. Wojtek, you win. You just won the internet. Okay, let's see. Doom. I don't have any doom and gloom music because I don't look at this stuff as doom and gloom. Let's see. Fetch is a trap to stake unless you have a ton of it. Costs so much gas to enter the Phoenix program and exit before you can get your fetch out. Well, Jeffrey, one of the beauties of staking and also the beauty of it costing a little bit is that if you stake your assets, you are much less likely to meddle with them. Meaning you staked it, you're not going to go in there and jack with it. You're going to just say, I paid 50, 80, 100. Listen, it cost me a ball sack load to stake all my assets. And don't think that doesn't stick in the back of my mind when I go to unstake. And so what I do is I look like this. I'll give you an example. If I was to unstake, so Graph token is a token. I was in a bad stake pool, to be fair, but I have since restaked a portion of my Graph. Now, which portion is that? Well, I know what my entry price is, and I know what my first exit is. My first exit is a 10x. So my first exit with Graph token is $2 and I have to look. I think it's $2.39 or somewhere around. It's between $2.30 $2.40. I was messing with it yesterday. So I took just my 20% that I'm going to sell off. I have that unstaked. The rest of it I staked. So I'm back in that long 28-day crap down thing. Well, because I'd rather earn some yield on the other. But I have my first exit is unstaked and waiting. And when I see if I get my 10x, gone. Back to Bitcoin. Bye, boy. Bye. Gone. But the rest of it is staked. And because there's a 28-day cooling off period or a wind down or a thawing period, whatever we want to call it, I'm much less likely to meddle with those assets. Same thing with Fetch. Fetch, the cool off is finance. I know it's going to cost me $400, $500 worth of Ethereum because Ethereum sucks. It's going to cost me all that to unwind that, to unstake. And also with Fetch, I'm getting Atomics tokens for free every day. I'm getting Fetch tokens for free every day. I've got some Fetch over at Gate that I'm lending a small portion just to see how it compares with Fetch staking. It actually pays more, but you don't get the other tokens. You don't get MetalX and you don't get Atomics. And my guess is they continue to incentivize Fetch staking with these new assets. That's the same thing that's going to happen. You guys know this is what's going to happen with Cardano as well, right? When you stake Cardano, you're going to start receiving ancillary assets, other assets that are utilizing Cardano. You will just get them. That entices me to not meddle, right? So staking is more than just grabbing some yield. Staking protects you from you. And I think that's incredibly important. And I think many of us would do really good if we could lock away our funds and at least put a barrier to exit. You know, we always talk about what's the barrier to entry? Well, that's a barrier to exit. And I think it's a good one. It's a financial barrier to exit. And I believe in Fetch for the long term, and I am loading up on Fetch. And I promise you this, ladies and gents, and pronouns that we shan't yet describe. By this time, Monday, my Fetch position is going to be twice what it is right now. I guarantee you. Because I'm going balls deep in it all weekend. Why? Because I think, and it's my gamble, but I believe that AI is the future of all of this, and I want to be deep, deep, deep in it. And it looks like, to me, Fetch and Singularity Net, to me, make the most sense. You do you. I'm doing Fetch and Singularity Net. How about that? Okay, so staking is good. Let's see. Yeah, you got to make it make sense. I'm going to give you an idea. Jeffrey, if you have Fetch and it's less and it's not a giant position, but you want to get some staking rewards. Well, it's not really staking rewards, it's liquidity, it's rewards, okay? Take a look at what they do on Gate. You can lend Fetch in these little 10-day contracts. And again, counterparty risk, it's an exchange, blah, blah, blah. But it pays freaking good. That's all I'm going to say. It pays real good. And you know what it costs to lend on Gate? $0. Now, is there counterparty risk? Yeah. Gate could disappear. Is there counterparty risk in the lenders screwing you over? Yeah. They could disappear with your stuff. But I have a small portion over there. I spin it. I constantly spin it. And I'm getting back much greater rewards than I am staking with Fetch, but I don't get the other assets from the Phoenix program. So there you go. Yay. And yeah, both Near and Audius, everything looks delicious right now, right? It all looks good. So yeah. Okay. Oh, Expat Matt, thank you. Yes, you're Roy. I finally got it, Babis, but it took me a minute. My brain box was not functioning as it should have been. Okay, let me say hello to Regomatic. He just showed up. Good to see you. Ivy Medusa, also good to see you. And there was somebody else. Ocean Dawn. Dawn. What's going on, Dawn? Safe Moons chart. Yeah, God. Yeah, good. Good luck. Solid Gold, you say you can't lend on Gate. Oh, you know what it is? I think your account has to be a certain size or a certain amount of time that you've been on the exchange. You can do a customer service request. Click customer service and just ask them, what do I have to do to qualify for lending? But the barrier to entry is it's minimal. You don't have to be like $1 million. Whatever. It's nothing like that. Is there an exchange that offers trailing stops? Yeah, most of the exchanges offer the ability to set up trailing stops. Okay, many of the exchanges do. I don't think Coinbase does. I know that Gate does. I think that KuCoin does. I believe BITTREX, I don't know. I'm not a happy fan with BITTREX right now after the little stunt they pull with Wax. Let me get back to you. You know, that's actually a good question, JR. Which exchanges will allow trailing stops? Trailing stops are great. For those of you that don't know how it works, it's simple. The price is moving. The price is moving. Your stop, you're basically your exit. It's a limit order to exit the asset, and it tracks with the price. So if the price goes from 10 to 11, your limit order might be 10% beneath. So let's say it's like this. At $10, you had an order to sell if it dips 10%. So that sell order would be $9, right? Well, if the price goes to 11, this moves up to like 9.9. If it goes up to 12, it moves up to like 10.8, right? It tracks it. And then if the price comes down, you're out. And that way you can capture some of that gain. So it's a trailing stop loss order. Does that make sense? Use them when you can. It's a good tactic, and it always seems to grab. Now, in incredibly volatile markets, this would only be, here's when you would use this. You would use this when you're going to exit with some profit. So if I'm going to exit right now with some profit, rather than exit right now, I might say, you know what? I'm going to put a trailing stop of about 4.5%, 5%, so that I can grab a little bit more before it comes back down and exits me out. Don't do that with your main position, because you're not, I mean, I'm hoping you're not intending to sell your main position, right? You're trying to see into the future a little bit and invest in that way, but don't be afraid to take a profit. New to, Ivy Medusa, good to see you. New to the crypto gaming, curious what the future will hold. Ooh, if only we knew. Experiencing the first crash. This isn't really a crash. This is a reset of leverage. And this happens a whole bunch. It happens a whole bunch. So Ivy, one of the cool things is what's considered a crash in other markets in the crypto space is just, oh, this is just what happens about once a month. So don't stress. Yeah, this is nothing. Pretty soon you're going to look like like you're going to have 1,000-yard stare. You know, you'll look like a steely-eyed sniper that's got like 1,000 skins. And, you know, you've murdered whole villages and you're just like, yeah, what's up? I mean, the guile, the intestinal fortitude you get from the crypto space is like nothing else. Alex, what's up? Okay, Scott has a question. I'm interested in lending near on Gate. Okay, but I don't understand how to do it. Have looked around a bunch. Any help there? Yes. Here's how it works. And I can do a walkthrough at some point, but essentially the principle is this. Lending on Gate is there are 10-day contracts. So you go and you click lending, and then you'll put the amount you're willing to lend, which whatever it could be. Let's say you have 1,000 near, you want to lend 100 or 1,000 or whatever. You put the amount in there, and I always just use market order. So I click market, and it takes the aggregate market order, and someone is going to borrow. They have to agree to borrow at that price. They agree to borrow. It locks it up in a little 10-day lending contract. Now, they don't have to hold it for 10 days. They could hold it for 2 days or 1 day or 3, whatever. But you get paid a percentage of the interest that's generated on that loan. And some of these loans can be massive. Some of them, like, I think so I've got some audio on there, and I think I get 0.34% a day. A freaking day. Like, you say that's ridiculous. Yeah, it's ridiculous, because that's like 100% a year. So anyway, so I do market, and that's how I do it, and it seems to work out pretty good. But again, with a tiny portion of my assets, and I'm just kind of experimenting, and I'm not telling anyone to go do it. Don't do anything I say to do. I just tell you, I share these things that I do just so you know, hey, there's one, Cryptard on YouTube, and he does this. Yeah, that's it. Don't do what I do. Don't do what I say. You do your own shit, right? Don't leverage me for anything else other than like, oh, that's interesting that one dude does that one thing. All right, cool. Baros, what's going on? Amod, what's up? Let's see. Yesterday, Nick showed how many 30% pullbacks. Oh yeah, there were tons. In 2017, there was a 38, a 38, a 38, a 30, a 33, and a 28. Is that right? There were 7 big, almost 30 or 30+% pullbacks. It's super normal. What do you think the bottom for Bitcoin is? Well, the bottom is probably, well, I mean, it could do all sorts of fantastic things. I think the consensus bottom is about 34,000. 32. Brant said that he put an order in at 32.5. He says that's what he thinks the floor is for this chaos. I think we're past that. My guess is mid 40s. I would say to everyone, if you get nothing else out of today's show, please brace yourself for an incredibly painful weekend. That's all I would say. Brace yourself to get your fucking clock cleaned this weekend. And then if it doesn't happen, you'll feel great. But I'm not super confident that we're out of the woods yet. There's still, listen, when Celsius, when that D-bag, that's not fair to say, because he was giving some money back for people that lost their money. So he's no longer D-bag. He's just smarmy. We're going to call him smarmy. When smarmy Alex says, please deposit more assets on the exchange so that you don't get margin called, take heed. He's not saying that because he cares about you. He's saying that because the margin calls are coming. And when they come, what happens is, you know, if you have assets on there that you're using to collateralize loans and those assets drop in value, you know what they do? They sell those assets into stablecoin to satisfy your debt service or to satisfy your loan or to satisfy your loan to value ratio to get it back up into the good space. So I would be very careful that you're not over your skis. Borrowing is cool until it isn't. Liquidity is there until it isn't. It's like chasing a cloud. You get there and there's nothing. You're like, I don't understand. I just saw it. Poof, gone. What's that? Oh, that's your entire portfolio. Why? You got over your skis and you got leverage. You didn't need to, because 200% year on year wasn't enough for you. You need 700. You need every green candlestick. No, you don't. Buy quality assets that you can explain to yourself and to others, that you're willing to hold for anywhere from a year to 3 years, and fucking hold them and stop trying to be the richest motherfucker on the planet. We can all win. It's okay. No one has to have all of it. The reason why I think that the weekend is going to be brutal is because I think if Friday doesn't pop up, and it doesn't look to be popping up at all, a lot of people are going to be in various states of panic and uncertainty, and margin calls are coming. Remember, this is crypto. You think Alex is going to wait till next Monday to call you on your margin call? No. Nope. People are going to get margin call. It's going to happen when it happens, right? It's 24 hours a day, 7 days a week. When the price gets to the point where you're going to get margin called, your shit is gone. Poof. It just doesn't exist in your account anymore. And then what happens if most people, which most people probably do, have Bitcoin as their asset that they collateralized? Well, selling creates selling. So if you got margin called and they forcibly sell some Bitcoin in the stablecoin, and they sell some Bitcoin, and they sell some Bitcoin, what do you think happens? Come on. This is not even complex fucking math. This is simple shit. And this is why I say you don't have to have all the money. Wolverine, you don't have to have all of it, bro. Can't you just have most of it? So, and again, I know I beat the same drum. Don't take on leverage. Wah, wah, wah. Everybody's like, oh, because of times like this. This is why. And if this only happens, well, it happens like every 6 weeks in crypto. And it's like, then we have 3 up days and everyone forgets it and it's back to the leverage. And not us, right? And when I'm talking about leverage, I'm not, for the most part, I'm not talking about taking a little bitty old loan at Nexo. I'm talking about these dick bags that go to Bybit, they go to Bitfinex, they go to Binance, and they take on 50, 75, 100, 125x leverage like dummies. and they get nuked. Now, the good thing about that is most of them are getting nuked for small chunks of money. It's not like one guy's, well, it does happen. Okay, let me tell you a story about a friend of ours, which I can't say his name because he's probably, sipping tequila right now until his liver explodes. But he had a fund that he was managing, and it was over, I have to ask. I have to get the exact details, but basically somewhere in the neighborhood of $40 million. $40 million. Leverage, gone. I want everybody right now to close your eyes and pretend you have $40 million and you've been in the crypto space for 8 years. You know what you're doing. You think. You get it. You think. You understand the story. You know the players. You know you've got your quant analysis. You've got your back testing. You have all the information at your disposal, more than anybody, more than most people. You have $40 million, 40,000,000. You're good, man. There's nothing. You could stop now. You could go buy 10 mansions if you wanted. I don't know, $4 million a mansion. I'd say it is. Or you could buy, a 50-unit apartment complex in freaking West Hollywood. And you could be satisfied with $100,000 check a month for the rest of your natural life, not counting inflation. But you take on leverage because you think you know more than everyone else. All gone. $40 million. Gone. Not like, oh, I'll go service this debt. No, $40 million gone. No more. You don't fucking exist in the investment space. That's right. That is greed. So this weekend, when everybody's feeling the pain, and the 3 people that got into crypto 6 minutes ago call you like, what's up with Bitcoin? How come we're not, what's going on? Is it time to get out? Bitch, you've been here 3 minutes. The fuck out of my text. You just relax, go through your portfolio, read about the quality assets that you have, and don't think about right now, this second, this minute. It doesn't matter. It's a blip on the radar. It will too be forgotten. Someone said, this is the worst crash we've had in almost 3 weeks. So focus on the reasons why you're excited about the space. Don't focus on the red. There will be plenty of it. Don't even reply to tweets and all these people that try to get you into this discussion and all these Johnny-come-latelys. It doesn't matter. None of that matters. You know why you're in the space. General Kaizen, what's up? And since you know why you're in the space, hopefully you understand the assets that you own. Make sure you understand every asset that's in your portfolio. I understand all of these. I like all of these. Yeah? And just be confident in that. Now, would it be some time to deploy funds? I don't know. There's only one person that ever picks the bottom, right? Because that's the bottom. And then there's only one person that calls the top, and everybody else is kind of in the middle. I'm more of a confirmation guy. So, yeah, it's kind of funny. So I like confirmation. So I'm not going to try to buy the bottom, but I'm simply dollar cost averaging into the assets that I like, which is why I will be, again, dollar cost averaging for me into AI. I think it's sold off way too much, and it hasn't even really had a run yet. So Fetch, Singularity Net, I'm hungry for those. Thor, Rune is the token. I'm hungry for that, but that's because I don't have an established position. I'm slowly building. I have a tiny little position, and I've been buying a little bit every week, a little bit. I'm going to buy a little bit more, and that's it. Am I going to take on leverage to do it? No, because I don't know where this thing turns around, and I'm not going to try to guess the bottom. So sometimes it's okay to wait for, it's always okay to wait for confirmation. Okay, let's look at, I had another article that I thought was pretty cool. Real quick, 21 shares launching Stellar and Cardano ETP. You say, what's an ETP? exchange traded product. Sounds a lot like an ETN, doesn't it? An exchange traded note, which sounds a lot like an ETF, doesn't it? An exchange traded fund. Yes. Yes, it does. Let me go into it really quick. Switzerland-based investment product provider 21 Shares is launching exchange traded products, ETPs, for the native cryptocurrencies Stellar and Cardano. 21 Shares, formerly known as Amun, said the Stellar XLM ETP ticker will be AXLM, and the Cardano one will be ADP. List on the Swiss SIX exchange on April 26th. That is 3 days from now. The firm said Thursday is responding to the recent surge of interest in the two cryptocurrencies after the firm decided to remove Bitcoin Cash and XRP ETPs. It's weird. 21 Shares said it had appointed Coinbase Custody as the main custodian for the assets underlying the XLM ETP and Kingdom Trust for the ADA ETP. Okay, both products have a base fee of 2.5% per annum. So 2.5% that's like the management fee, and will be made. Listen, all of these exchange traded products, ETFs, ETNs, ETPs, they all have some management fee. Why? Because they're actively managed for the most part, and will be made available on Germany's Stuttgart and Dusseldorf multilateral trading facilities, MTFs. Why is that last bit interesting? This is marginally mainstream, not here in the United States, but it's marginally mainstream. Could be interesting. What does it really mean right now? Doesn't mean anything right now, but it's definitely something to keep in the back of your mind, that exchange traded products are being built around XLM and Cardano. What will they have to do? They will have to own the asset to tether these products, or they'd have to have a fully formed, somewhat saturated futures market, which doesn't exist, meaning they're going to have to own these assets. And again, it's another facility that's going to scoop up these assets. I'm sure they're going to go over and stake. They're at least going to stake the Cardano, especially if they're going with Coinbase custody, because that's one of the big deals, is that Cardano was going to be eventually stakeable through Coinbase custody, meaning if you're an institutional client and you don't want to handle staking of Cardano, they will sort that out for you. They will stake. So that was a kind of a source of contention. Anyway, cool. They also have a Polkadot ETP. So just keep your eye on the ball. And then the very last thing, and I thought this was the most interesting piece of news, it's the craziest thing. Tether USDT is launching on Coinbase Pro, meaning Tether, the scammiest stablecoin, the most, it's the craziest deal. I'm not even going to go into it. It's a crazy story. Every one of the executives is either on the run, has been indicted, is in custody, or is on bond, escaping various degrees of investigation and indictment by the U.S. government out of the Southern District of New York. You can't make this shit up. Anyway, here we are, and Coinbase is going to list Tether. And the problem with Tether is that Tether prints money out of thin air. And if you're a Bitcoin person, you love this. You absolutely love this, because Tether prints money out of thin air, out of their electronic counterfeiting machine that's never been successfully audited, that may never be audited. I am so surprised that Tether it's the craziest thing. Anyway, to me, that's insanity. I'm like, that's the first thing that I think Coinbase is doing, where I say, you know what? Brian Armstrong got him some balls. So when you say, are they going to list VeChain? Of course they're going to list VeChain. They're listing Tether, which is the biggest obvious counterfeiting scheme in recent history. Very likely responsible for 90% of the Bitcoin gains in the first, 5 years of Bitcoin since Tether was on the scene. Not very first, because Tether wasn't originally around in the very beginning, but since Tether jumped on the scene for that kind of the last 5 years of Bitcoin's price action, it looks pretty obvious that Tether was used to support the price. They would print Tether out of thin air, click it into existence out of thin air, buy Bitcoin. Bitcoin price would go up, sell it for other assets, wash, rinse, and repeat. And up you go. Well, here we are. Tether's an ERC20 token, so just remember that, yeah, it's the same ridiculous fees. It cost me to move Tether from BITTREX the other day to KuCoin because I had to sell my wax, go to Tether to KuCoin, sell the Tether into Wax, go from Wax to Wax's platform to buy my stupid baseball cards, which is a lot of fun. But to do all that, the fees were just astronomically high because it's running on Ethereum. So it's USDT is an Ethereum asset. You're going to pay ridiculous fees. It cost me 79 Tether to move Tether. 79 to move a stable coin. Anyway, there you go. Coinbase is going to list Tether, meaning a few days from now, Coinbase. And let's look at their stock really quick. They're in the 290s. If you bought this thing, if you sold puts against this, that's the way to play it. Look where we are. Look where we were just a few days ago. Let's go to the 1 day. So, I mean, oh no, sorry. Let's go to the 1 month. Look where we started just 2 weeks ago. Not 2 weeks ago. Really just a few days ago. Okay, last week, 409, and look where we are now. 294 bucks. So put your way in, call your way out. Don't get caught up in the mix. All right, RJ Abe, good to see you. Are you worried about paper markets hijacking the price? I am absolutely worried about that. Anybody that understands the precious metals market and has watched how that was perverted by the futures markets and by all of these derivatives, yeah. But I also remember this, that in the beginning, the first 2 to 3 years of ETFs applied against gold and silver did like a 3x. It was real good for people that owned gold and silver. It was real bad for people that got in on the tail end of that because it just perverts those markets. And it just creates a dislocation where you have a paper market, a fake market, a derivative market, and then you have the physical market. And you could see a physical Bitcoin market and a paper, kind of a symmetrical paper market that is dislocated where there's a spread in there. Crazier things, right? What would signal confirmation for me? I think Bitcoin probably over 55K again. I'm not touching much until Bitcoin gets back to 55K. I'm not even buying Bitcoin. Now, on the other side of it, that would adjust down as Bitcoin goes down. If Bitcoin gets into the mid 40s, 44, 43, 42. So full disclosure, and this will be the last thing for the day, I sold puts yesterday at 44. So I sold puts that expire tomorrow. Well, tonight. I sold puts for tonight at 44. I don't imagine Bitcoin gets below that, but I didn't sell them for 2 weeks out because I don't know. So I kind of wanted to reassess. So I sold short term. I sold those yesterday. I'm going to look again today. I'll probably sell for May. Right around there. If it looks like it's turning around, I might sell a little bit in the money, get back up to 50, 52. But again, we need some kind of confirmation. That to me would be confirmation. I think we need to break back up. I think this is going to be a rough weekend for everyone. So again, focus on quality assets. Enjoy your time in the space. Don't stress. Lawrence, good to see you. Andy Panda, good to see you. JDSG, C, good to see you. And Seller T, so depending on, good to see you. RJ, thanks for joining us. Candace, always nice to see you. Ella Paul, if I didn't say hello. Tony, good to see you. And for anybody I didn't acknowledge, I do apologize. McNabb, hello. It's certainly not personal. It's business. Have a great weekend. Stay out of trouble. Don't do anything. My poor insolvent drunk, strung on meth, smoking water grandmother wouldn't do. She's on them lewds again. I'm like, Grandma, take the blue one. She's like, I like the red ones.
Hey, this is the Profit with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Profit. Hey, hey, you talking to the Profit. Hey, hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them house roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Profit to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it popping. We chilling in the drop. I need some crypto, put it in my pocket by any means I rock. This is the Profit with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this where you get that. So go and grab you a nice chair. It's time to sit back and talk to Profit. Hey, hey, you talking to the Profit. Hey, hey, you talking to the Profit.
It's all fake news. It's phony stuff. It didn't happen.